So let's talk about the balance sheet with these assets, okay? So not too long ago, we talked about the accounting software. Anybody remembers that? I said not accounting software, sorry, the accounting equation. Anyone remembers that? It's okay if you don't. Assets equal liabilities plus equity. Okay. So assets are on the left side of the equations and they have to equal the liabilities plus equity. So when you track an asset correctly, it is anchored to your entire financial picture, which is pretty cool. You'll have you're not going to have some bloated number and you think you have more assets or more worth in assets than you actually do. No, you're going to see an accurate amount if you're tracking this accurately, which is. Hey there, family. Gabrielle here, daughter of the Almighty, mom to two amazing kids, and a Yorkie named Luna. Also, I'm a fellow Christian business owner. If you're ready to say yes to financial clarity and exchange chaos for calm, you're in the right place. We're diving deep into strong faith, practical stewardship, and savvy bookkeeping. All right, family, grab your coffee and your notebook. Let's talk about God, business, and getting those books in order. Welcome back, family, to another episode of Guiding Grace Bookkeeping. Today, we're defining something fundamental, okay? Business assets. This is the list of things your business owns and is essential for seeing your true net worth. All right? So imagine cleaning out your garage. You have tools, furniture, your car, maybe some client products, depending on if you run your business at home. And that inventory process is exactly what tracking assets is like. Okay. So I once, I'll have a story and everything for everything. I once had a client who was tracking a laptop she used personally as a business asset. And this is a common mistake. If a business doesn't legally own it, or if it wasn't bought with business funds, that is not a business asset. We're going back to our lesson of not mixing personal and business finances. Do not mix personal and business assets. They are not the same. Okay. So a simple test of it is like a business asset is anything of value the business owns that can be used to generate future economic benefit. So, a simple test could be you can ask yourself, does my business own it? And can it be turned into cash? That leads us into the two different types of assets. Yes, of course, there's two different types. Don't freak out. Don't worry. I'm going to break it down here. Okay. So, the balance sheet. One of our reports that we need for financial clarity of our business, the financial health of our business, the assets are on this particular report. Okay. So we need to actually understand these two type of assets. So when you're looking at your balance sheet, you're able to understand exactly what you are looked at because they're treated differently in your bookkeeping software. Okay. So like if you're using something like Xero, QuickBooks, Sage, FreshBooks, they're treated differently, okay? And your accounting software also sort them for you. So you don't have to worry about like if you're adding it in, like if you purchase, you're like, oh my gosh, this is that and the third. No, your accounting software will do it for you. That's why we love accounting software. It takes a lot of the mundane and stressful part of bookkeeping out. Okay. So let's talk about the first type of asset. Current assets. This is short-term cash. Okay. So things that are cash or can be turned into cash within 1 year. That's the timeline here, the time limit. Things that can, I'm going to say that one more time. Things that are cash or can be turned into cash within 1 year, right? So some examples are cash in your bank account, accounts receivable, which is again, what? I'm going to wait. Think about it. I'm not going to say anything. Still not saying anything. Okay, I think you probably got it now. Your account receivables, money clients owe you, and inventory. Short term, in and out within the year. My businesses, my business owners, Ooh, I'm trying to speed something into existence here. My business owners that deal with inventory, you that's a current asset, right? Because you're constantly overturning the inventory, you're constantly selling it. We're going to speak abundance, we're going to speak overflow, we're going to speak great stewardship, we're going to speak increased sales here. Current asset, in and out, in and out. It's not staying there. So this is the most liquid part of your business. I guess you can kind of think of it like your operating fuel, right? And the second type is non-current fixed assets. Okay, so long-term equipment, things that your business own and uses for longer than a year. This is your computers, your furniture, your vehicles, land, buildings, those type of things. Okay. Um, so these are the big investments that are usually subject to depreciation. Ooh, new accounting word here. So depreciation is writing off something value over time, which is a key tax issue where clean bookkeeping is non-negotiable. So say if I bought a computer and the lifespan of said computer is 5 years, because technology is always updating, right? So we're just going to throw a number there. Say, for the sake of easiness, that laptop, I'm gonna say laptop because computer, I don't think that would be realistic. A laptop was worth, you paid $300 for it. Okay, so you have the 5 years, so that's 60 months, right? There's 12 months in a year. So you do 300. We're just going to do simple, divided by 60, because every month you get something that's $5 a month that you get to add over the course of the 5 years instead of writing it all off once, something like that, because you're continuously using it. It depreciates over time. So you get reimbursed and you can claim that off on your taxes over that span of the 5 years of the 60 months. And it's $5 a month for that laptop that you can write off on your taxes. So that's something to remember. Depreciation for your long-term fixed assets, non-current equipment. Okay. Even buildings and things like that. You can write that off if you add an addition to it. If you add an addition to, say, if you have a home and you add a home office, it's a structure. So that lasts a little bit longer. Let's throw 30 years into that bad boy. Okay. So you got, maybe you spent 30,000 for 30 years. Okay, so you do 30 times 12, get how many months that is, you take how many months that is, and take that 30,000 divided by that, and that's how much you can write off every month for your taxes that you can keep track. And the great thing about it, guys, I know I just spill a lot of math at you, but the great thing, like zero, all you gotta do is just run a depreciation. When you add that asset into your accounting software, you tell it to run a depreciation at the end of the year when you get ready to do your taxes, and it writes all that off for you. It tells you how much that is. So you get your nice bundle of reports, hand it to your CPA or your tax preparer, and you're good to go. That is so high. Accounting software is so huge, guys. It saves so much time. It saves so much time. Again, bookkeeping is so important and it needs to be done. Either you do it with someone. Like if you're doing it on your own, you're savvy, go ahead with your bad self. Or you do it with someone, aka a virtual bookkeeper like me. You work side by side with someone, or you hire a bookkeeper like me, virtual, internal, someone, or that can do the books to handle this bookkeeping for you, because it will make your life as the business owner and your tax preparer life a lot more easier when it's time to start adding up those numbers for Uncle Sam, okay? So let's talk about the balance sheet with these assets, okay? So not too long ago, we talked about the accounting software. Anybody remembers that? I said not accounting software, sorry, the accounting equation. Anyone remembers that? It's okay if you don't. Assets equal liabilities plus equity. Okay, so assets are on the left side of the equations and they have to equal the liabilities plus equity. So when you track an asset correctly, it is anchored to your entire financial picture, which is pretty cool. You'll have like, you're not going to have some bloated number and you think you have more assets or more worth in assets than you actually do. No, you're going to see an accurate amount if you're tracking this accurately, which is amazing and a very huge key point to clarity. Okay. So the key is the recording habit, right? So when you buy that $2,000 computer, a fixed asset that's not an immediate expense, like I said, you have to depreciate that. Okay, so it's not an immediate expense on your profit and loss sheet. It's a purchase that converts cash, one asset, into equipment, another asset that the business still owns. It just changed form. So it's not a cash asset that can be burned right now. It's not a what? A current asset. It's a non-current fit asset. Okay. So this is where it is super important to have clean bookkeeping habits. Okay. They're super vital. If you accidentally categorize that computer as an expense, you artificially, okay, it's important, lower your profit, which looks bad to lenders and creates a headache for your tax preparer and a headache for you because you're pressed and you're stressed. And, treating assets correctly in your bookkeeping is an act of financial clarity. Okay. Again, bookkeeping is the history of your business. Bookkeeping tells your bookkeeper or you your business story, what your business is trying to say. So it's so important to have those clean habits. I know that some people are like, I don't want to do my bookkeeping. Then you don't have to do it. Then you hire someone to do it. Hire someone that you trust to do it, to walk you through it, explain it so that you have an understanding, because you cannot run a business and not know what's going on in your business. That's not a responsible business owner, and bookkeeping is so vital and so important. Okay? So, your business assets are simply everything your business owns that has value. So, differentiate between current assets, which is like cash, and fixed assets, which is your equipment, like your computers and your laptops, your vehicles, your buildings, things of that nature. Okay, so tracking them correctly is the foundation for accurate taxes and seeing your true business health. Accounting software, I cannot stress that enough. My favorite is Xero. Yes, I am a Xero advisor, but I love the ease of Xero. I love the customer service of Xero. I will stand on that hill and sing it to the top of my lungs about Xero. I love Xero accounting software. It's so easy on the eyes. It's easy to understand. Even if you have a bookkeeper, you can still work alongside your bookkeeper in your accounting software, and you can see and you can understand what you're looking at just with basic foundation knowledge. You don't need to be tech savvy, and that's why I love it so much. All right. So, little friendly reminders at the end here that we have our newsletter, our weekly newsletter, Love List of Little Relatable Stories, with the week's podcast link to the episode, just in case you missed the launch notification on your phone. And we also have the download for the free ebook, Chaos to Cha-Ching. Okay. And then for my business owners that are ready to start doing their books or have been doing their books and they need a little guidance, they need a little clarity. Okay. There is a 30-minute strategy call link that you can book me for 30 minutes. It's $25 only. Small little pocket change for a lifetime rate of, return on investment. If you need me to look at books for 30 minutes to give you some guidance or a straight consultation and you want to work together, there's no pressure on that. That opportunity is also in the show notes link. Until next time, family, keep your books beautiful. If I don't hear from you, Merry Christmas, Happy Holidays, Happy New Year's, depending on when you're listening to this episode, and please stay safe. Until next time. As we close out today's episode of Guiding Grace Bookkeeping, I truly pray that something resonated with your heart and brought you closer to financial clarity and peace. If you felt that connection, or if a specific insight sparked something within you, please consider taking a moment to leave us a review and subscribe to wherever you listen to podcasts. Your feedback helps us grow and reach more individuals like you. And if you know someone yearning for more grace and wisdom in their finances, be a blessing and share this episode with them. Remember, walking by faith and managing with grace can transform your entire world. Until next time, stay blessed, keep shining, and let's keep those books looking beautiful.